Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, daily chart. We've talked about a few things this week. We've talked about how's it going to deal with 3,900, 3,910, the June 27, June 28 highs, 50-day exponential moving average, which your red line there, 3,950, and then, basically the next thing being the need to go ahead and print something with a 4 on it. Well, they've checked all those boxes this week. And where we find ourselves with regard to the Bollinger Bands is, yes, these remain. So as of this morning, we were sitting at, 6.5 on the band. So they're starting to expand a little bit. A few days ago, this area here, we had some of the tightest bands that we have seen in the tightest bands of calendar year 2022 for sure. What we're seeing now is a ride of that upper band. It started on Wednesday when we engaged it yesterday, and we engaged today. So how does that typically work? Well, typically the way band rides go is they tend to be dip buys. And 10:30 in the morning yesterday, we got a dip buy. They defended the area of the 50-day exponential moving average. They defended the area of the hourly mid-band. And they came in around 10:30 yesterday and they bought it, which, it was a nice short down. It was a nice long up. We did another long later in the day. So there are plenty of opportunities for volatility, opportunities for handles, and we continue to take advantage of that stuff. All right, where do we go from here? Well, you're up in the 4,000s now. You've got an upper band ride. The question becomes, can they continue to progress to the upside? There's certainly room for expansion, because compressed Bollinger Bands expand, compress, expand, compress, expand, inhale, exhale. It's the way of the market. It's just the way markets trade. Hourly chart, you can see they tried to convert down here, couldn't get it done. We are way far and away from the weekly pivot, which we were dealing with back on Monday, Tuesday, which we established to support Globex early Tuesday morning during the Europe session. And really, when they launched it and converted monthly pivot Tuesday after that choppy open, they really haven't looked back. It hasn't been perfect support at the hourly mid-band at all, but ultimately it has been a line that the bears have been unable to convert. And if they're not going to convert stuff like that to resistance, it's going to be a tough go for the bears. So they printed the 4,475 on the close. They brought it back in pretty quickly. We've spent Globex below 4,000. Depending on how they want today to go, what do the bulls want to do? They want to print 4s all day. They want to print 4s all day. They want to close it with a 4 on it and head into the weekend. The bears want the opposite, but I think the bears need more. I think the bears need to avoid 4,000, establish that as short-term resistance. They need to take out they got a lot of work to do. They got to take out this high here. They got to get back below 75. Ideally, get down in towards that spike high, the spike low yesterday, down at 39.30, and ideally close it down there, if for no other reason than to give themselves a fighting chance Sunday into Monday with regard to the new weekly pivot. It's a situation with the bears where you really are starting to feel that in a vacuum, the market, at least for the short term, wants to rally. And unless you get that shoe to drop, and there's plenty of shoes in this world that can drop all over this tape, that's for sure. But unless you're getting that stuff, they're having a very difficult time progressing price to the downside and keeping it there. So it comes out yesterday, president has tested positive for COVID. They tried to take it down. It worked for about half an hour. They bought it. Took it back up, higher high, off we go. So it's a situation where, as earnings starts to roll through, and you're seeing some of these earnings reports, and you're seeing some of the news out of Europe, and it's all that stuff is still there. But what I've always said for the 10 years that I've been doing this webcast is, over time, the market tends to adapt to all of this. And when it does, it kind of finds its feet and decides, that in the bigger picture, we need to buy dips and need to generally grind higher. It did that after COVID. It did that after everything else. Now, I'm not saying we've put in a bottom. I don't think we have. And even if we have, I wouldn't really care. I don't trade that way. I don't give a shit. I don't care. I worry about the 10 handles in front of me, and worrying about the 10 handles in front of me takes care of the next 10, the next 10, and the next 10. And if you trade that tape this way, in the way that we teach you guys how to do things, then you're sitting around this week with another very good week, and in a week where we've had runners of 30, 40, just very, very solid 60 on Tuesday. That was fun. Because we're not trying to play amateur economist. We're not trying to play amateur mortgage broker. We're not trying to play supply side economics, expert. We're just, we're focusing on what we need to focus on. Don't get caught up in trying to press your feelings or ideologies or thoughts or visions of what the world should be onto the tape. This is the type of tape and this is the type of environment that'll do it. Scroll Twitter for 30 seconds and you'll see it. Avoid that at all costs. It's only going to mess with your trading. So, bottom line, you got VWAP 30, 39, call it 89, hourly mids at 88, proprietary moving average 93. They tested the proprietary moving average for about a half an hour during the 7 to 7:30 hour, and before that, the entire 5:30 to 6:30 period of time, and it's held up. If that holds up, they can get over 4. They can take out 04 and go do anywhere from 13 to 17. Bears want to do the opposite. Convert 88, convert 80, get back into 74 to 70, and then see what the afternoon looks like. If the bears put pressure on the market, you'll see the bid, the people will take their ball and go home. And, if you've been long all week, based on this chart, you have some profits to take if you're that type of trader. Don't think that stuff doesn't happen as you head into weekends. So just stick to the chart, okay? Put barons away, get off of Market Watch, and just focus on price in front of you. It will keep you on the right side of the train. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come join us, and I will talk to you soon. Great weekend. See you Monday.